Okay, I'm going to quickly take a look at gold. Okay, and the last time I discussed this, I had some doubts about whether the fifth wave was complete or not for two reasons. One was the 40-week average, and you can see in the last 1 week we've come very close to testing the 40-week average. And the second reason was the channelized behavior of the extended fifth wave that we've seen for most of the last 3 years. So I'm going to show you that channel again. This is the channel. Okay, and we can see we had. I was expecting that if there was a missing fifth, it would probably end up at the upper end of the bigger channel, but we failed from the smaller channel, which means that possibly the original thought that you ended the fifth wave here is most likely the case. One could alternatively think that it ended here at the next lower top in a truncation, but I would at this stage leave it as complete at the high. What is really interesting is now you're reaching very close to both the 40-week average and the long-term trend line. The long-term trend line of the channel is at 1592. The 40-week average is at 1624, and the swing low from where I started considering the potential that there could be an extension to the fifth is at 1603. So once you fall below this low here, 1603, then it definitely means that there is very little room. I mean, there's no room for any missing fifth left based on that assumption. Why am I discussing this today? I really noticed something in a much smaller time frame, and that is once again the classic head and shoulders pattern here. The neckline for this is at around 1581, and what it means is on basic HNS targeting that we could actually be looking at a very significant breakdown when that happens, with the target going all the way down to 1250. So with an extended fifth wave complete for a multi-year run on gold, that would be a pretty steep correction. Some really longer term analysts might still consider whether if you're still bullish longer term, whether longer term channels could come into play. The next major trend line for the move since 2005 would be closer to 1130, 1150. So maybe at that point we do look at what the structure is. So far, the fall from the September highs did not appear like a clear impulse. So in terms of wave count, it's going to be a WXY corrective. We could probably have another X and Z if that happens, but and therefore because it's not been impulsive, we're looking at a very different kind of corrective behavior. In another sense, gold now therefore seems to be reacting to the rising dollar rather than to falling equities. Equities have still not globally fallen so sharply, and therefore what we are looking at is probably a fall in gold which is responding to a rapidly rising dollar. So since I've already discussed that the dollar is on a major move on the way up, with the momentum breaking down on gold, there's probably a lot more downside left to be seen here now. That's it. That's my gold update for the day. Thanks.